Welcome back. I'm Charles Lewis, the Austin area realtor who brings you topics and discussions that will help you make better decisions when you buy, sell, or invest in real estate. Today, I want to talk about some of the things we can expect as we move into the 2023 home buying season. Historically, the spring marks the beginning of the buying season because that's when we usually see an increase in the number of transactions and an uptick in the prices paid for homes. The buying season usually begins around March and lasts through September or so. Last year, just as the spring season kicked off, mortgage rates began to rise, and by September, they were double what they had been at the beginning of the year. This caused a lot of buyers to drop out of the market, and that decreased buyer demand effectively ended the pandemic housing boom. We began to see listings stay on the market longer, which meant buyers had more houses to choose from. Sellers began offering concessions, including price reductions, and the buyers who did remain active were able to negotiate much more favorable terms. As we enter the spring of 2023, everybody has an opinion about what we can expect. There were a lot of sellers last year who weren't able to sell their homes for what they thought it was worth, and they're expecting to be able to sell that same house for more money this spring. On the other side of that, there are a lot of buyers who began to see prices come down last year and who are anticipating further reductions this year. Two other significant things to consider is that the cost of lumber is decreasing, which could impact the cost to build new homes. And in February, builder sentiment increased by the highest amount that it had in the last 10 years. A lot of what everyone is expecting is tied to their own self-interest. Sellers want the most money they can get, and buyers want to pay the least amount they can. And they're both expecting that they're going to be able to get what they want in this 2023 housing market. Now, unfortunately, they both can't be right. And the housing market very rarely does what we hope it will do. I think there are going to be a lot of people who are going to be surprised about what happens in the 2023 Austin housing market. This spring truly could be either the beginning of a boom or a bust. I'm going to argue that the single most important factor that will determine which direction it goes will be mortgage rates. And if you stick around for this video, I'm going to tell you all about it. Let's first talk a little bit about what happened in the Austin housing market during the pandemic housing boom. Across the nation, there were bidding wars, cash buyers, and investors who drove up home prices. The price run-ups in Austin were higher than almost every other metro in the United States. And Austin was consistently ranked as one of the most overvalued housing markets in the entire country. Everyone who owns a home in the Austin metro loves those higher home values, unless those values are used to calculate their property taxes. The bad news is when we enter a housing correction, which it looks like we did in 2022, the metros that saw the highest rate of increase are more likely to see the biggest declines. According to Realtor.com, in October 2022, Austin had the highest percentage price declines in the entire nation. There are a lot of people who read those same numbers differently, like Cord Shiflett, who is the president of the Austin Board of Realtors. Now, the difference in these interpretations was that Shiflett was comparing the October median price to the previous October, while Realtor.com was only looking at the change from June to October of the same year. No matter how you evaluate it, I think we can all agree that the entire Austin metro has seen unprecedented growth in home values in a very short period of time. In March 2020, the median price in the Austin metro was $335,000. By March 2022, it had shot up to $521,000, which is a 55% increase in only 2 years. If average appreciation is 3 to 5% per year, that means we saw about 10 years worth of appreciation in that 2-year period, which brings us to the topic of interest rates. During the price run-ups, interest rates were about 3%, which meant that the same amount of income could qualify for a bigger loan. In other words, low interest rates increased buying power. In the spring of 2022, those interest rates started to rise, and by October, the average rate on a 30-year mortgage was over 7%. This had a big impact on mortgage applications. As mortgage rates rose in 2022, there was a corresponding drop in new mortgage applications. Those rates peaked at 7% in October and gradually decreased around 6% by January 2023, which is this brief uptick in applications. Entering 2023, there was a lot of optimism that the Federal Reserve had been successful in taming inflation and would slow down their rate hike. In their first meeting of 2023, the rate hike was only a 1/4 percentage point, and Jerome Powell started talking about disinflation. We're still not close to the goal of the 2% inflation, but there have been gradual declines month over month. Two reports in February conflicted with this optimism, though. The January jobs report showed that the economy had added over 500,000 new jobs, and retail sales increased more than it had in the last 2 years. In other words, the rising interest rates have slowed inflation, but the overall economy is still strong. We're already seeing mortgage rates tick back up to the mid 6% range, and the Fed is signaling that they may go back to the 0.5% increase in their next meeting. This is significant because if mortgage rates go back to 7% or higher just as we enter the spring home buying season, the realities of the 2023 housing market may not align with what many are expecting. This is the January 2023 Austin Board of Realtors sales report. The median price in the Austin Metro continued to decline to $450,000. It's also important to note that this is the first month in years where the median price is lower than it was the previous year. Remember, it peaked last March at $521,000. That January 2023 median price represents an almost 15% decline from that peak. Another interesting takeaway is that since the median price was $335,000 at the start of the pandemic, if the appreciation had been closer to normal, let's say 6%, we'd be sitting at a median price of $376,000 2 years later, versus the $450,000 we're actually at. That $73,000 difference is about 20% higher than it would have been if the pandemic housing boom had never happened. Now, if you're still waiting to buy a house because you think prices are going to continue to come down this year, you might be right, especially if mortgage rates continue to rise. The only other thing you might want to consider, though, is it possible that we are entering a period where you run the risk of waiting too long? There was an initial shock when mortgage rates hit 7% last year. But when they settled back down to 6%, more people became more willing to accept the new reality and became active buyers again. Whatever the new normal turns out to be, it might take a while to accept it. But when buyers do, they will start buying again. And if you wait to jump back into the market when everybody else does, do you think it might be possible that you run the risk of paying more? Also, you should not ignore current builder incentives on new construction. Most will offer the 2-1 buydown, which reduces the interest rate for the first 2 years, but there are some who are offering promotional rates that extend for the life of the loan. Now, as a seller, it's imperative that you realize how competitive it is out there. If you think you're going to get away with cell phone pictures and a discount listing service like some did at the height of the pandemic housing boom, you probably are going to be disappointed and will eventually need to pull the pricing lever or let your listing expire. There are plenty of examples in this current market where buyers are willing to pay a premium for a well-maintained home in a good location that is priced appropriately. But remember that for every house that sells at a premium, there are 5 or more comparable houses in the same area that don't. Your marketing plan should take into account all those other houses on the market which are competing for your buyer's attention. If you have a good agent with strong marketing skills, they should be able to help you position your house as the best value. And remember, best value does not always mean least expensive. I get emails, texts, and phone calls almost every day from people who think about buying or selling real estate here in the Austin area, and I would love to help you out too. If you like this video, you should check out this other one that I did. And don't forget to subscribe to my channel and hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.